Imagine ordering a coffee and slipping into a daydream. Are you also hearing Jennifer Garner ask what's in your wallet? Well, what's in your wallet is very important. And as for all that credit card rewards talk, she might be onto something. Most people should be able to save at least a few $100s every year just by using the right credit cards. Love them or hate them, those plastic or metal cards that can instantly purchase anything from a coffee to a car are no stranger to consumers. More than 80% of Americans own at least one credit card. Every time you pay for something with a credit card, you're borrowing money from the card issuer to cover your purchase. While it might feel like it's free, it's certainly not. You then have to pay that money back either in full at the end of the month or over time, with interest. The average credit card charges about 20% interest these days, so it is a very profitable business. So, first things first, if you're not in a place where you can pay that money back by the time it's due, experts don't recommend you have a credit card at all. 20% interest on a balance that you've accumulated, and then you pay interest on top of that. I mean, that's a really big hole that you're continuing to dig, and it's going to be really hard to get out of if you don't pay your credit card balance. Credit cards require approval. Once you're approved, the bank authorizes a credit limit or the maximum amount of money you can borrow. That depends on factors such as your income, your other debts, and how much available credit you have on other cards. But here's the caveat. Whether or not you're approved depends on your credit score. Meanwhile, your credit score is determined by your credit report, the information related to your credit activity you might not have if you don't have a credit card. It's a catch-22. How do you build your credit history? Well, the simplest thing is really to get a credit card, use your credit card, and pay it on time. Credit scores generally range from 300 to 850. The higher the credit score, the more responsible you're deemed. Credit scores not only affect whether or not you get approved for credit cards, but also your credit limit, and your interest rate on loans, mortgages, and the terms lenders may assign you. Insurance providers, landlords, and employers might also want to do a check to determine your trustworthiness. If your goals are to buy a house, get a car, get a loan, the first thing that you need to do in order to build your credit history is to get that credit card going. Those Jennifer Garner commercials are for Capital One, but there are numerous companies in the US that offer a wide range of credit cards. There's the issuers, American Express, Discover Bank of America, Citi, Wells Fargo, and then there are the networks. They facilitate transactions between the merchants and the card issuers. The four major card networks are Visa, MasterCard, American Express, and Discover. Two of the world's largest card networks, American Express and Discover, are also card issuers. There are standard credit cards, rewards cards, balance, transfer charge, student business secured limited purpose, prepaid cards, and the list goes on. Different options that may or may not be right for you depending on your personal circumstances. Standard credit cards are the most traditional type. They have an annual percentage rate or APR, sign-up bonuses, annual fees, late payment fees, balance transfer fees, foreign transaction fees, and the most exciting, rewards. There's actually a whole industry dedicated to maximizing credit card points and miles. Some people love it, and they love going down that rabbit hole and treating it like a game. Bankrate.com senior analyst Ted Rossman earned more than $1,700 in rewards in 2022. But getting the most out of your credit cards depends on your spending habits. Which perks would save you the most money? So how do you choose? If your family spends a lot on groceries, get a card that gives 5% or 6% cash back on groceries. Like, that's a really nice inflation buster right there. Maybe consider a second card that's just a solid flat rate, something like 2% cash back on everything. Most people should be able to get at least $200, $300, $400 a year just by using the right cards. Rossman says the rewards that get the most attention are often travel-related flights, hotels, rental cars, access to airport lounges, free or discounted TSA pre-check, priority passes, global entry, or clear to get you through those long airport lines. I think a really good strategy for a lot of people is one of those transferable points cards, something like Chase Sapphire Reserve or Amex Platinum. Being able to transfer to different airlines and hotels opens up a lot of options. The sort of next level tip is within that. If you find partners of partners like United's part of the Star Alliance and American as part of One World. Credit cards offer rewards for various spending categories like dining, groceries, and gas, as well as perks such as extended warranty and purchase protection. Cash back is a popular choice, especially in times of high inflation. Redeeming for merchandise may not offer the best value. Other rewards include sign-up bonuses, fraud protection, and investment opportunities. Some individuals manage multiple credit cards for perks like free flights or cashback, but it's important to use them responsibly to maintain a good credit history. American credit card balances soared to $986 billion in Q4 of 2022. When it comes to credit card usage, paying in full each month is key for maximizing rewards. Surprisingly, cashback is more popular among those with balances, indicating a lack of awareness about interest rates. Lower income and less educated individuals tend to miss out on redeeming rewards. It's crucial to manage credit responsibly, considering factors like credit limits and spending ratios. While multiple cards can offer flexibility, focus on paying down debt first and seek low-rate options or cashback cards without annual fees. Once you've accumulated rewards, don't stop there. Continuously review your debts and credit cards monthly to stay on top of your finances. Utilize tools like Excel spreadsheets or apps like Mint to track your assets, debts, and liabilities. Don't let your rewards go to waste. Many cardholders fail to redeem their rewards, which can lose value over time due to program changes and inflation. Understanding your finances can empower you to make informed decisions and achieve financial stability. And that's it. We've covered everything from the basics of how credit cards work to maximizing rewards and practicing financial discipline with Profitability Plus. Remember, credit cards can be powerful tools for building credit and earning rewards, but they require responsible usage. By understanding the ins and outs of credit cards and practicing good financial habits, you can unlock the full potential of credit cards and achieve financial freedom. So go ahead, take control of your finances and master credit cards for a brighter financial future with Profitability Plus.